During a profit avalanche for organized banking, there continues to be no reasonable funds available for most startup businesses and over half of existing small business.
That's funny because organized banking records show small business application approval rates have increased 25% over the last 5 years. That sounds pretty impressive, right?
Sure it does. Right up until you look at the numbers. They used to approve 15%, and now they approve over 20%.
Oh boy, pick us up off the floor. Only 15% though. That must have been the excuse that Congress needed to use the small business problem as their political opportunity to pay back organized banking.
Absolutely. Under the guise of the SBA and USDA lending guarantee programs for small business, the politicians created a guaranteed profit for organized banking. 50 to 80% of the amount loaned to any qualifying small business is practically risk-free to the banks.
So organized banking gets the guarantee on the loans. Has small business lending changed?
No, that's what's absurd. Unfortunately, these loans still have to be approved by the same wise guys, and that's less than 50% of applicants. Almost 100% of small businesses are declined. The reality is that these loans are going to the same businesses that would have gotten the loans before the program started.
That's unbelievable. So it's not trickling down to help small business, it's just helping organized banking make more money.
Yep.
That sounds exactly like, what we usually hear coming out of Washington.
Sure. Alternate lenders outside of organized banking are available. They charge fees the wise guys drool over. At 36% and rising to 84%, these options only make sense if you're avoiding a catastrophe or if your profit ratio is high enough and there aren't any better choices.
Wow. That really is expensive.
It is.
There's another option that provides more businesses with credit immediately, and it shows you how to manage your lenders instead of them managing you.
That sounds pretty good.
Yeah.
We call this option a PubLock. It's a portfolio of uncollateralized business lines of credit. And we know that's a mouthful. What's important is that it provides 0% funding now and additional 0% funding later.
Hold the bus. A portfolio of uncollateralized business... What? A PubLock? It almost sounds like a college drinking game, Jeff. I mean, seriously, how is a PubLock going to provide us with funding now and more credit later?
I wish I went to your school. By using a tool organized banking has tried to suppress forever, competitive resourcing. Does that sound silly? When was the last time you applied for more than one credit card at a time? Didn't you get declined with a letter about too many inquiries or too much credit recently issued?
PubLock exploits a systemic anomaly, overcoming organized banking's collusive suppression of your access to creditors and credit. By making it possible for you to open up multiple lines all at the same time, we call this the power of multiplicity.
Okay? If you have a credit card account and you always pay it on time, and you pay it off from time to time, your credit score is going to rise a little bit, right?
Yeah.
Well, sure. How much higher and quicker would your score rise if you had, let's say, 12 accounts and did exactly the same thing?
PubLocks are created by specialized lending brokers who know how to enhance your credit score and profile. And then they compare your enhanced credit profile to the target profile of multiple lenders who they have working relationships with.
By matching your profile to what motivates the most competitive lenders, you receive both higher credit maximums and longer 0% interest periods. These brokerage relationships are the key to a portfolio of multiple credit lines issued within days of each other.
Wow. And you can obtain combined credit lines of $50,000 to $250,000 per business owner from 7, 12, 15 or more creditors with 0% interest for 6 to 24 months. There's a current blended average of 9.9 on balances carried beyond the 0% interest periods.
We don't recommend doing that.
No.
In fact, we're going to show you how to continue using 0% money until it's no longer available in the marketplace. Of course, that's your choice, and we're kind of getting way ahead of ourselves.
Let's look at the big picture and take 60 seconds to consider lending from the perspective of what's important to lenders. Let's say you own a small bank and you have 100 small business customers.
Yes!
Who each have a $100,000 loan. Each of them is paying 7% interest, and you have about $10 million loaned out. You earn $700,000 a year in interest before expenses.
I'm being very Trumpish. For every 1% or one customer that defaults, you lose 15% of that specific year's profit. Gone are all future earnings on that lost $100,000. Oh, and you lost $100,000.
Ouch!
Now there's an 80% possibility that any of your customers will fail.
Now consider how the lenders look at credit cards and smaller credit lines like $30,000 or less. First, it's the most profitable block of business the lender has, and second, there is less risk exposure for your specific business.
Third, small credit lines are a much lower risk category than an 80% small business failure rate. If you owned the bank and were facing these realities, would you make a small business loan? And if so, why?
Not me, man. Now it should be a lot easier to understand why a pub lock provides easier access to more money. Seriously, think about it. How many offers do you receive for credit cards?
There are literally thousands of lenders across the country begging for the perfect mix of clients who pay great in order to find their profits from the ones who don't.
Well, it's so much easier to get money from a pool of thousands of eager lenders searching to find borrowers than it is to get your business loan from any single source who's afraid of every shadow.
Don't go under. In a pub lock, your lending broker is the resource to help you establish a portfolio of lenders, all offering 0% initial interest rates for 6 to 24 months. Look at a pub lock as your 4-stage growth rocket that provides initial working capital and pays for itself.
Let's remember our primary goal here, Jeff.
Sure.
We want to provide their initial funding and increase their credit score to excellent. Because by doing so, your future available funding multiplies, and the interest on the fund still remains at 0%. Here's an example based on $100,000 available for initial use.
Your initial pub lock is issued at $165,000. Because protecting your credit score matters, you never want to use more than 85% of any account.
That's right, Jeff.
So $140,000 would be deposited into your business checking account. Then the multi-account portfolio creation fees deducted, leaving $120,000, and you need to set aside $17,000 for the first 6 months of payments.
This provides you with $103,000 of unencumbered funds for 6 months at 0% with nothing out of your pocket. Now you can plug that into your money-making machine and turn it into profit. How fast can you double your money, and how long is your profit turnaround cycle?
Let's say you started today with the money to buy your raw materials. Then everything goes exactly as planned without a hiccup. How long would it take you to complete your service and receive payment in full? Think in 6-month increments, so 6, 12, 18, or 24 months.
Okay, now what if nothing goes right?
Oh, you mean like normal?
Yeah. How long will it take to complete your service and be paid in full? Now, what's most likely and how long is that? Let's call that your profit turnaround cycle.
Okay, just a few more quick questions. After paying all expenses, including taxes, what's your highest profit percentage and what's your lowest? And what's most realistic? Set these numbers aside while you consider if a pub lock rocket credit line is a fit for you.
After maximizing your credit profile, we begin the process of funding your credit lines. First, we match you with lenders who are looking to open new accounts with customers whose credit profile matches yours. We will show you not only who those lenders are, but also the most successful way to apply to each one individually.
We will share what to say and how to say it on the phone when you talk to them. We're going to do that so you can get maximum results. We'll show you how to get lenders to increase their initial offers. You will learn the specific words that turn decline into credit line. You will learn all of this and more while you're establishing your own Rocket Credit portfolio.
Once the entire portfolio is approved and available, we will assist you in properly transferring the funds into your business checking account. So none of the transfers are treated as cash advances, and all of them qualify for 0% interest.
We strongly suggest that you set aside the first 6 months' payments and establish auto pay on each account. It is critical. Every payment is received on or before the due date, and minimum payments are avoided.
At stage 1, we are 6 months into your plan, and we need to move $42,000 around. $31,000 will pay off all of the 6-month 0% interest accounts, and you'll set aside $11,000 for the next 6 months of automatic monthly payments.
Now, your profit turnaround time and expected cash flow will tell you if you need to set aside some of your initial $103,000 for these expenses. Whether they come from profit or the original credit line withdrawal is a strategic decision you should discuss with your accountant.
Either way, you'll have $61,000 at 0% for 6 more months, and you'll make all the payments over the next 6 months because you set aside that $11,000 to do so.
So let's recap what's changed for you over the last 6 months. Your credit score has increased because,
well, you've successfully made 72 payments on time,
you've repaid 3 accounts early and in full.
and miraculously, you still have 40% of your credit line available unused.
Now at 9 months, you'll have received offers from multiple lenders.
You're negotiating for larger amounts and better terms, just like you practiced when you originally set up your initial portfolio.
You've replaced some or all of your 6-month 0% interest lenders with longer 0% windows and larger amounts.
At stage 2, we're 12 months into your plan and we need to move money around again. $27,000 will pay off all of your 12-month 0% interest accounts, and you set aside $7,000 for the next 6 months of payments.
At this point, your credit score is excellent at 780 plus,
Hey.
and you are in the select 20% of borrowers who receive the best terms because you have now successfully made 126 payments on time.
Most people take more than a decade to do that, Jeff.
You've repaid 6 accounts early and in full.
I think most people never do that.
You now have 65% of your credit line available and unused.
You obviously manage money very well, and you clearly are not most people like I was talking about.
At 12 to 18 months, your credit score is the highest it has ever been. Congratulations. You have multiple offers to review. You've gained freedom, independence, and choice.
You've dropped lenders, added lenders, and more importantly, added to the amount of credit now available to you. You also have more 24 and 18-month 0% interest money available.
At stage 3, we are 18 months into your plan, and we need to move 27 grand around. 24 is going to pay off all of your 18-month 0% interest accounts, and you're going to set aside $3,400 for the next 6 months of payments.
During this time period, your credit score is rising and you're just simply amazed. You're using your new credit to expand your business again, and you're routinely receiving, counter-offering, and expanding your credit portfolio.
At stage 4, we're 24 months into your plan and you need to move 21 grand around. You are either paying this final lump sum from profit or a balance transferring it to another 0% account somewhere else.
Your available credit should be approaching twice what it was just 24 months ago. You're using 0% interest for all your non-asset-based lending. Your credit cost for everything is rock bottom, and, well, your Rocket credit portfolio has paid for itself now many times over.
Finally, let's compare a Publock Rocket credit line to traditional lending in the 3 most common business situations. Everything goes great. Sometimes payments are late. Sorry, mate, it's too late.
First, when everything goes great in a traditional loan, you make all of your payments on time and you pay off the loan. Your credit score may even increase slightly. But the next time you want to use credit again, well, guess what? You're going to have to apply and qualify all over again.
Know what's different with a Publock? When everything is great, all your payments are on time and you pay off the loans when the 0% interest ends. Your credit score will skyrocket because of the power of multiplicity. Some of your portfolio of lenders will offer you another 0%. Lenders outside your portfolio will offer you 0% as well.
You know, Jeff, believe it or not, some of their lenders will raise their rates and tell them to pay the interest. There's no other offer. You know what I recommend? Drop them like the turds they are.
Yep.
And the biggest difference for you is how lenders are making you offers that you consider whether you're going to keep them or not. Now you're in the driver's seat, not organized banking.
Okay, sometimes payments are late. So is there any difference between the 2 types of lending if you make a late payment?
No.
All right, what if it happens again?
Ooh, uh-oh.
All right, now this is a huge difference between the 2 types of lending for you.
Yes, with a traditional business loan, the bank increases your interest rate and wants financial documents or they're going to close unused parts of your credit line. They may also close the line completely, even after receiving the financials.
Because all of your credit line is with them, the penalty rate applies to the entire loan.
That's right.
Once organized banking passes on your financial information to the credit bureaus, additional lending is typically...
Forget it, right? With a pub lock, when one lender raises rates because they can, you simply transfer that balance to one or more of your other accounts. Because, well, you can. That's right. Someone is definitely in charge here, and again, it's not organized banking.
Assuming all your other accounts are already full or unavailable for transfer, you could be stuck paying that extra cost, 15 to 30% penalty rates, on one of your accounts, while the other accounts would still be in their 0% status.
So get this. A bad report from one account out of many has a minimal effect on new offers and absolutely no effect on the other current accounts. I would be actively seeking out and looking for a 0% account to transfer that penalty rate pig you talk about into.
You bet. Okay, so what happens when it's, sorry mate, too late? A worst case scenario is bankruptcy. In a traditional loan, your friends at organized banking will seize your collateral and sue you for the rest.
In a heartbeat.
In a pub lock, unsecured debt is typically negotiated to a much lower settlement amount.
So in a best case scenario where you make money and repay within the 0% time frames, you'll have a higher credit score, more credit available at a lower cost using a pub lock than you could ever achieve using one lender with one loan.
You will work with many lenders at 0% interest and discard every lender who raises their rates. You're truly in the driver's seat with all the options, not the other way around.
For fast, specific information about your options, please contact us at our website contact page at www.MoneyMiners.Biz. We thank you for watching.
Thanks.
This video has general and specific information about business lending and is neither offering nor providing specific or individual legal, accounting, or financial planning advice. All business ventures carry risk, and this video mitigates none of that risk. For these and many other good reasons, you need to establish working relationships with excellent legal, accounting, and financial planning advisors. The examples given herein are for conceptual clarification and not a specific representation of any person's results. All credit is issued by independent financial institutions, whose terms and limits will change over time. Your specific results will vary by individual efforts and creditors selected.